So I was wondering if any of well, just generally, if any of the other or the editors on the handbook had anything that they wanted to add to the reflections, as now that they're seeing now that they were watching the video. Um, but I was also really interested to know what each of the editors thought about kind of promising and disappointing things that have happened over the last 30 years of research in this area.
I can start if you want, Matt. I'll start with disappointing. One issue that I suppose has always perplexed me is the tendency to box this so-called research domain into a corner and to accuse it, sometimes quite rightly, of being overly self-referential. And that criticism means that much of the excellent work that was conducted, in my view, in the 90s and early 2000s is now, at this particular time, being almost completely ignored. And I'm talking here about things like the social bookkeeping experiments that were conducted at CSER back in the early mid-90s, the work of Gray and Bebbington in land care in the early 2000s, published in CPA. Much of this is so relevant to all the discussions going on currently everywhere about the impact of, say, climate risk, et cetera, et cetera. But in the context of the academic literature, I don't think any of this is in fact being picked up. Now, I had a discussion with this with one of the authors of these studies recently, and that individual said to me that perhaps this is just due to it being frankly old. It's 20 years ago, and maybe things have moved on, but things haven't actually moved on in my view. Everybody else has caught up with these individuals, and that means that their work still remains stupendously relevant. And for me, that's one of the disappointing aspects of what I see happening currently with respect to what's going on. Because if some individuals would go back and read some of that work carefully, they'll see how groundbreaking it actually is. And I'm not saying it because I know some of these people or because I studied some of this work when I was a PhD student. It's genuinely hugely relevant to many of the debates that are going on today in the context of accounting and so-called sustainability. That's the disappointing aspect. I think for me, one of the most exciting aspects is, well, there are currently 127 people on this call. The first CSER conference I went to was in 1996, I think. And there were about 30 people there, maybe 35 people there. And I think the growth has been phenomenal. And I think the interest has been phenomenal. And I think that's a testament to many of those early purveyors in this area, like the David Owens and the Rob Grays and the others around that time. And these people can be easily forgotten because camps have evolved over time as well. Some of which don't agree with each other, and that's absolutely fine. So that's one of the more inspiring things that I find in this particular area. The fact we're actually having this conversation, the fact this book is being published alongside another excellent book, okay, by Matthias Lehn, Helen Trzewiczka, okay, and it's coming into an environment where these discussions are now being welcomed because these discussions are seen as being highly relevant. I think that's also a huge opportunity as well. They're just some initial reflections.
Yeah, if I'll come in, it's sort of very, very similar. One of the problems I think goes back is that people don't necessarily engage with prior research. They possibly don't read it, which I think is one of the most disappointing things. But people don't engage. There seems to be a sense of deliberate difference about trying to do things differently rather than engaging in a coherent kind of body of work in that regard. I think some of the most exciting things is the ability to work with networks of different people. In particular, I will say this, I think some of the work on alternative accounting, counter accounts, moving into areas like animal rights, looking at areas, to do with kind of water. Working alongside, kind of Colin and Shona in terms of linking with activism. And for me, that's one of an area that's been really encouraging to see how we can link with it. But I do think that the missed opportunity is it's often easy to work on the periphery with these types of groups where there's energy. The real challenge is changing, I think, Brent, changing the mainstream. getting the everyday accountant to do things differently and to do things better. And I think that's a massive opportunity. But I think a lot of the stuff that's been from studying and researching those on the, like on the periphery, the activists trying to bring about change, that can also be used in if you like mainstreams, in looking at management accounting and looking at auditing and looking at assurance.
Seeing I here, I might add to that. And I think the point about reading deeply is really important and going back to material. But I would also say one of the things that I think is particularly available to us now, and maybe not used as much as I'd like, is reading widely. And of course, we're all really busy. And so how much you get to read is harder and harder. And I suppose, like the others on this panel, I had the advantage of arriving in a field when it was being built. And so everything that came up you could read. And then at some stage in the last 20, 30 years, there was so much of it you couldn't keep up with it, which is a sign of success. But it does mean that elements that could link really nicely together are turning up in quite different literatures. And that means, for example, that you might miss insights from finance and leverage points that are available from investors. You might not be able to be reading enough in the area of institutions to know which institutions might be able to help the environmental accounting journey. And likewise, even keeping an eye on the organizational science and management literature, because it's huge, and seeing what people are talking about there. So one of the things that myself and a colleague have been working on is building an evaluation framework for a corporate sustainability initiative. And we did it by way of systematic literature review, which is a way of keeping on top, if you like, of these really broad literatures. And we found 203 relevant papers that were published in 112 journals. Like, nobody's reading 112 journals. And so I think in some way the success of this field is that things have popped up all over the place, and they are in their own wee community of practice and interest. And what we miss is what they look like all together. So I think there's a challenge there for us to articulate our work in a way that some of these other communities will see and understand, because I totally agree with Brendan. Nobody reads our work in accounting and finance, which is a wasted opportunity from their perspective. But then also thinking about these other disciplines in a systematic way. So why would I want to know about finance? Because if I have a listed company, and they're not the only game in town, but if I do have a listed company, their owners and the rating agencies and the stock markets matter for what they can and can't do. And so I think seeing literature in chains of influence is maybe a different way of researching, rather than thinking, I'm a management accountant and I do this, but rather, I'm a management accountant and I do this. How does it link to other literature that would allow my work and the things I'd like organizations to do to have stronger and better outcomes associated with it?
I think that one of, to me, I mean, I agree with what was already said, but I think that one of the promising things that have happened in the last 30 years, of course, is the institutional development and the fact that, environmental accounting is now even regulated in some countries, and the number of people that is doing research in this area is also very encouraging. So this is, there are lots of positive results from this development, but at the same time, this is a little bit unrelated to positive change in the bottom line of the environment and sustainability. So this is one thing, and the other thing is, as has already been mentioned, this a spread of the interest about sustainability reporting and environmental accounting in different areas. Has not been accompanied by a kind of, strengthening of the discipline. There is a kind of guerrilla, research by a lot of people in different journals, sometimes, and this is very deceiving, sometimes repeating research that was conducted 20, 30 years ago, and that has, is past in the environmental accounting literature. And I think that the handbook is a good opportunity to take stock of what we already know, because I see in management journals and in sometimes in journals that are local or that are publishing research very quickly, that they are doing research that has already been done. We already know that this is not working, for example, and this and I'm thinking about research analyzing the relationship between disclosure and financial performance and all these kind of legitimacy theory. We already know about these issues. So I think that there is an opportunity of joining forces with the people that are doing this research, and I think that the handbook is a very good opportunity for building and articulate, as was already said, a strong discipline, and try to push environmental accounting to make a positive contribution to sustainability.
I want to pull to the question that Ujjal had asked inside of the chat. He's talking about boards having a responsibility to be ecological literate, and how can we raise this issue for responsible investors and to ensure a sustainable future. And I'm going to put my pessimistic spin on this. I was wondering, in relation with Ujjal's question there about this ecological literacy, what people's feelings were on. Let me reframe this. I think particularly after the last IPCC report about how bad things are going, I think there's a lot more agreement on man-made climate change, the need to do things. This isn't really an argument that you have to make to younger generations, but there seems to be more and more agreement about we need to do something. There's these big problems. And in the book, we talk a lot about ecological literacy. We need to develop this ecological literacy so that we understand, we can make informed decisions about the environment. Now, the pessimistic side of me sees that sometimes and thinks, well, are we just kind of leading ourselves into another, okay, now everybody needs to become ecologically literate, and we're not going to be able to make any of these changes because people aren't literate enough. Kind of like failing to change things because we constantly think we need to be doing more preparation to get to this magical position where we can make all the right decisions and know all the right answers. And I know that that's extremely pessimistic, but COVID times, I don't know, give me a break.
I think we have to conclude that Matt needs a cuddle. That's the best I can do. So I'm going to try to maybe address that a little bit, but in particular look at the question in the chat, which is a really good question. And I'm going to try to run through 5 points that I think come to the fore here. Firstly, investors are a big and differentiated category of actors. So quite often when we say investors, what we're thinking about are investors in publicly listed companies that might have potentially could have quite short-term priorities and might be buying and selling without necessarily being particularly interested in the underlying assets of the underlying business. Even though they have an enormous sway and a great deal of political clout within the system, they are the minority of investors. Investors are much broader than that, and in particular it will include all the SMEs, all the family-owned businesses, privately held businesses, etc., etc. And those investors are not straightforwardly good, but not straightforwardly bad. They will have different kind of needs for information and also different propensity to support pro-social, pro-environmental behaviour. So I would say, yes, we do need responsible investors, but those responsible investors, if you like, are not, we almost start with the hard to reach of those investors and try to make them responsible, where there's a lot of much more easy to reach and investors who are amenable in doing things for social and ecological good. So that's one thing. Second thing then is, will an investor be a leverage point in a finance system in order to change the outcome? And this is where I think coalitions of investors may be more powerful than a single investor. So again, when we think about investors, we maybe see them much more as individually and attached to a particular organisation, rather than blocks of investors who might have positions that help to move markets, either in terms of common disclosures or norms of behaviour or tools or whatever about how we might deal with things. Now, in that area, I have some concerns because at the moment, what's the fastest animal on the earth? It's not a cheetah. It's somebody becoming an expert in ESG, because somehow suddenly this is something that everyone knows about. So in that respect, the move towards ESG and everyone offering services in it, I think is hugely problematic, because we're not getting ESG and the literacy most definitely isn't there. I'm trying to hatch a plan to take a lot of their money and try to train people in that. And so again, education and professional education and continuing education will be part of that. The third thing then, I think that's behind this question that needs to be thought about more carefully, is the idea that if you produce the information, you somehow achieve the outcome. And this is something that Carlos and I have been obsessing about for quite some years. And it's also, if you like, a very sort of modern trend, in that it's called information governance. So you don't say you must do something or not do something, because that's actually quite hard to regulate. But what you do is you say, tell me about it, and somehow imagine there's going to be behavioural change coming through from that. So in that respect, I think it's quite difficult to imagine that information provision on its own is going to do the work. And that comes back to the leverage points and amplification points that it might be needed for. Number 4 then, and this is where I know Brendan's been doing some work, and I think it's pretty exciting, is I think there are boundary objects in the system that would allow us to translate from corporate through these boundaries objects to ecological and back and forth. Now, these boundary objects could be risk. ESG is a potential but quite a flabby boundary object. Making some sort of strategy with regard to what you're going to do using the IPCC's scenarios, for example, as a possible way of doing a boundary object. And increasingly, we're starting to see institutions like the Task Force for Climate-Related Financial Disclosures and the Task Force for Nature-Related Financial Disclosures coming into the space to act as some sort of boundary object. And the rating agencies would be boundary objects as well. So it is possible that there is this reading through from the ecological, and maybe from the ecological literacy side of things, through to the organisational side of things. Now, some of those boundary objects are really lousy. They don't work well, they don't work in the way people say they're going to work, or they misdirect the signals, or with ESG, it's too loose to be able to actually operate in a way. But some of them will work, and it's designing and co-designing the ones that work that might be quite important. And then the final thing I'd like to say, and this is a gap in the handbook, which we had thought about doing, but there wasn't enough literature, and it was quite difficult to find the person who would be the right person to write it. It was potentially me, and I've already written enough for the book, so another chapter from me. And that's the issue of fiscal reform. So taxes and subsidies and other fiscal elements of that sort. Now, a price on carbon tax, that's out there in the carbon chapter, thinks and talks about some of those sorts of things. But then it's also the case, it's what's been highlighted in quite a strong way is the subsidies. So a lot of negative activities have strong subsidies associated with them, and oil and gas exploration would be one of them. In the seafood industry, there are massive subsidies for building boats to chase even fewer fish in the ocean for even less, ecological and economic output. So that whole tax and subsidy debate is something that the social environmental accounting community is not particularly active in. Certainly Julie Lockhart, who was a colleague from the northwest of the States, did a lot of work in the 1990s, but nobody's really opening up that category. And I think it's a really fantastically productive area where tax experts and ourselves could collaborate. So that was 5 points. I probably went off scope there, but hopefully that is some sort of help.
If I may, picking Jan's last comment about tax accounting, I will say, one thing that was at the beginning and coming back to the literature in the 1980s and 1990s, one thing that is at the birth of environmental accounting is getting away from the shareholder, getting away from the investors. I think that this is my personal opinion. Okay, I think that of course investors are very important stakeholders, but when social and environmental accounting was conceived as something going beyond, considering shareholders, investors, but not stopping in investors. So, for example, taxation, governments, is an important stakeholder. And then, accounting is in many places. So my reaction to this question would be, okay, boards, investors are very important, but they are not by any means the only stakeholders that need to be considered in environmental accounting. And I will add to this that considering the members of board members, this kind of interpretation that if board members have this characteristic or that characteristic, if they have information, they don't have information, this is already substantial addressed in the management, in the finance literature. But I think that we need to I will tend to recommend to think beyond the finance literature and to think in what is missing in the mainstream literature in terms of not waiting for the investors to make the right decision, but thinking in other ways to push companies to do the right thing to be sustainable.
Can I just tack on to, because I think, Carlos, you were making you made a point that I think Jenna, that has been made before about linking into different literatures and kind of building on all the knowledge that has already been developed, and not just in social and environmental accounting, but in other fields as well. And from the perspective of a PhD student that is looking to develop their thesis, I think it's when I put myself in that mindset, I think it's really easy to talk about, like I need to go look into the social geography. I think it was Brendan was talking about, or they're look into these other fields of research that are not normally connected with accounting. And that's a big ask for a PhD student. Like, hey, not only do you need to come up with an innovative topic, but you need to go and read in all these areas that I have no idea, what they're doing. Do you have any advice for research students looking to do that, as to either to build the confidence to do it, or how to kind of like strategically approach engaging with other fields? Does anybody have any thoughts on that?
I'll come back on that one. Oh, sorry, my big problem is people doing accounting and assuring things that they don't know what the thing is. It's actually there's an incredible arrogance in certain things to actually, you know, I'm going to go and look at disclosures on, you know, kind of poverty without bothering myself to know what poverty is. I'm going to look at something like climate change, but I'm an accountant, I'm finance. I don't need to go and find out what climate kind of science is. How on earth can you account for something if you don't know what that thing is? That's how we've got into the problem that we're actually doing. So it's really important that we actually kind of like do that. And I don't think it's an unreasonable ask. It might not kind of always make it into the paper in accounting organization and society, but it's part of actually understanding what it is you're going to research. And I think we've all been at seminars where you're just suddenly going, this person doesn't know what it is they're talking about. They don't know. I mean, number of people who've looked at, for example, taken studies from the American Stock Exchange and looked at it in other stock exchanges, who have very different kind of like customs and practices. You know, it's kind of, it's meaningless. So I think we kind of like, we have a privileged position as researchers that we cannot kind of like, we need to respect that privilege by finding out what it is we want to do. Remember, we're choosing the topic. It's there. Just another thing on the previous thing is we mustn't think that only people who buy shares are investors. Many other people are invested in organizations. That includes the employees, that includes the community, who actually do things that enable the organization to succeed, often given their resources and their space and given up rights and opportunities for other people to actually to do these. I also think another major area to look at is when we look at the amount of money that flows through investment and compare that to the amount of money that flows through procurement. Why is it that we're kind of so focused on the provision of financial capital rather than the provision of investing in resources through other kind of forms of transaction? And I think that we need to actually start to expand beyond those really naive, simplistic assumptions of what investment is, and actually look at different ways of doing it. Then when we look at that, and then look at designing accountability mechanisms for these other investors, which actually Brendan quite rightly, a lot of that's already covered in 1987 in the CSR book, where actually that was the kind of one of the premises of it, but we've just lost track, and we've just privileged this one form of people giving money, but they don't even give money to the company. They give money to other kind of like people who've already got money, and they don't look at the kind of impact and different things like that. But I think it's about recognizing other investors and looking at the relationships that they have, and what is a business dependent upon, and how do they account for that kind of dependency relationship and actually kind of like what's going on. But a final thing for a pass over to Brendan is we can't wait until we've got this kind of perfect, going back to your point, Matt. I don't think anywhere are we actually saying, we need to wait till everyone's eco-literate. We need to actually start challenging people's certainty and looking at different ways of thinking. And I'll put it round to everyone sitting around this table. How many of you teach these alternate literacies in your classes when you've got control over it and you can actually start to kind of challenge it? It's something that we really need to do ourselves and take control over.
On the issue of investors, I think I'd like to reiterate that point. That community is so large and diverse, it's incredible. And even in the formation of major disclosure mechanisms, you find that different investor groups have major differences about disclosures in this area and have debates you might be very surprised about. But more importantly, preparers are also different. You can't talk about companies in some big global context. Preparers debate constantly what they want to disclose, and they debate that with different types of investors. So preparers are not only trying to consider what they should disclose and how to disclose it, they're also trying to keep a very diverse investment base satisfied. And that interaction between the preparers and users, something I've observed in the TCFD, is phenomenal in terms of studying where this area can develop and moving us away from simplistic notions of responsible investment. And if you want to get an idea as to how generic and bland the notion of responsible investment has become, and how dangerous the notion of ESG and responsible investment as terms will become, if you want to bring about any sort of even incremental change, have a read of Tariq Fancy, the ex-head of ESG investment in BlackRock. There's an article by him. All you have to do is look up his name and you'll find it. And the title of the article is "The ESG Industry is Dangerous." This is somebody at the heart of the sector that's pushing responsible investment as an industry. And my last point is regarding this is, I've got a friend who's an investment analyst, and he keeps telling me, Brendan, I know the ESG data is rubbish, but I need it because it sells product. Get real, everybody. This is what's happening.